15 minutes ago, the gold just broke another level of support down $1,000 from the last 3 trading days, meaning everyone who purchased the dip, then purchased the dip, then purchased the dip, now it's down at least $1,000 per every gold they purchase. This is how funny things can go, and can go very, very fast. And we're talking about only over the weekend. Imagine when the volume boosts tomorrow. Just look at this. The numbers that you're seeing on the screen, the chart for the actual futures and the spot gold prices indicate something very, very likely to happen. There is no reversal on the horizon. There is nothing that is going to save the gold prices, simply because if you look at the size of the candles, if you understand technical analysis, you understand the volume gap between the green and the red one overtakes the downtrend. There is no reverse indicator. There is no level 2 that indicates that there is enough buyers at these levels, meaning the people who are really interested and are looking to buy, to add some gold to their position, are not be looking at these levels at all. Most likely these people are sitting around 4,000, 3,500, something like this. Much deeper correction than the current one. Because if you look at the numbers over here, you understand that most people who actually bought at these levels, they lost at least $1,000. At least $1,000. And if you know, people who bought gold are not people that are trading, meaning people allocating funds, which could be 10,000, 20,000, 50,000. This means that a lot of these people are sitting on gigantic losses. And looking at the chart over the weekend, judging by the volume, judging by the views, judging by the following and the comments and fear online, you do understand these people are extremely afraid that this could go down even more. And you know why this is a big thing? Because they already know what happened with the silver trade 20 years ago. People bought the run-up on silver, then waited 20 years just to break even last year in 2025. So imagine this, you're putting once in your lifetime, you decide to actually invest, you decide to take some risks on the market. You buy gold because everyone is telling you to buy gold. All your barbers, your waiters, whatever cashier at Walmart, everyone is talking about buying gold, stock up some gold, prepare yourself for the recession, there's no way out, and then the gold dumps and you're 50% down in like freaking 4 days. What we even talking about over here, guys? And look at this. Just go through the comments. Don't listen to me. Don't read the newspaper. Just go on the comments and see what is the sentiment, what people are actually saying. People who recently purchased, right? People are freaking out. It is very hard to find somebody who is saying, oh, this is good, it is normal, it's a healthy pullback. No one is saying that. People are asking, okay, why it's crashing, why it's not going back up, oh my gosh, I lost so much money. Just read the comments, right? This is not bots, this is not some fake scam accounts. Just look at the people. Some normal people who probably listen to somebody who talk nonsense and they purchased at the top. This is like people who bought Bitcoin at 115,000 and they were hoping to resell it at 180,000, 18,000 or 120,000. So they're gonna make 3 to 5K. What happened is that Bitcoin fell from 115 to 110, then 1.8, and these people realized that, you know what, we're not gonna be able to make money, let's cut our losses. Remember, every time when your trading plan changes, this means that the price action has changed. When the price action is changing, you need to change your trading plan. A lot of people are physically, mentally, and emotionally attached to the gold and silver. They don't change their plan, right? So they bought gold at whatever price and they said, I'm going to sell when it hits 10,000. And they sit on this price target and they don't change anything. Well, gold is no longer at 46, 45, right? 48, 5,000. It's not there. So you need to adjust your trading plan always. This is why we're talking about risk management strategy, because your plan changes based on the price. Based on the price, you have different volume, different amount of people are interested to buy or sell. This is how the hype train is actually moving. It's not moving based on your own vision. Oh, today I'm gonna buy and I'm gonna wait until it hits 6,000 or 10,000. No one cares. The sentiment is driven by the actual numbers, order book, and the spread between the buys and the sells. What is the most met demand price for people who wanna buy and the people who wanna sell? In between you have the spread. The closer the spread is, the more fair the market is. This means that it's a very, very close competition because between the people who currently hold and the people who currently want to buy. If the spread gap is very, very large, this means that there is a huge opportunity for manipulation. This means that the people who bought, they don't want to sell cheap. So this is why people who want to buy, they cannot buy cheap. So one of these groups has to lose, has to give away their advantage, and has to either buy more expensive or sell cheaply, right? And when the gap widens so much, it is also very hard for Wall Street to fulfill orders, right? This is why we're seeing complete difference between the prices of the physical gold, the spot prices, and the prices on the futures market, right? This is very, very important because the volumes in each of these different categories, it's moving with different volatility. People who have, let's say, a basement full with gold or gold in some reserves with some banks around the world, Singapore, Switzerland, whatsoever, they don't really bother about daily price action. Believe me, these people are the last people who will be worrying about price action, because even if the gold goes back to $1,000, these people have so much more money that the gold is not really their main financial exit plan. But people who are currently hold on their spot shares, right? People who are really investing every single day, following the market, these are the people who really worry the most, because this is probably one of the biggest investment. This is the highest concentrated investment asset allocation for these people. So this is why these people are following every price action. They want to follow every news. They want to make sure that they're not going to get rinsed like a lot of people did already with many different projects, with many different stocks. Same thing happened with Peloton last year. 2 years, 3 years ago during COVID, people were buying Peloton at $200+. Where is Peloton today? Right? People were buying crazy stocks that were overhyped, and people didn't put up the work to understand the concept, the business model, and the reasons for why it's up or down. Same thing is happening with gold. People just buy because other people buy. Buy because someone tell them that it's better than cash, and they said, okay, cool, I agree. Let's buy some gold. And when the gold dumps 50%, and then when you put 1,000, now you have only 500, and tomorrow morning market opens and it's still lower, and your 500 is only 450, and by the end of the day it's only 400, what are you going to tell me, right? It's nonsense. People do stupid things all the time because they use emotion, because they use the mentality of sheep-like attitude where everyone else is doing it, I can do it as well, and also people are lazy. It is very hard to find somebody who really put up the work and time and really realize where their money are going, and after that, how fast or how early they can expect to get some returns. And of course, what is the worst case scenario? Because if you met some of the people who are hyping up the gold and silver, if you ask them for the worst case scenario, they don't have worst case scenario, which is the scariest part over here.